Welcome to The Explainer, where we dig into the big ideas making waves. Today, we're unpacking the investment thesis for a huge new property launch in Singapore, SKYE Holland.
So let's start with a puzzle, something that seems to, completely break the rules of Singapore property. Is it even possible for a prime core central region property to be built on land that costs less than land out in the suburbs?
And look, this isn't just some theory. The numbers are right here. The land for SKA at Holland, deep in the core central region, the CCR, was bought for $1,285 per square foot. Now that's actually cheaper than recent land sales in the city fringe, the RCR, and even out in the suburbs, the OCR. I mean, that's just something you almost never see happen. And that very unusual price point, well, that's our way into the whole story today. It's really the heart of the investment argument for this brand new development, SKYE Holland. All right, so let's get the basic facts on the table. We're talking about a pretty big project, 666 units spread across two towering 40-story buildings right in the heart of District 10. And you've got to pay attention to the developers here. It's this all-star team of four of the biggest names in the game. For anyone buying, that kind of lineup brings a massive amount of confidence. So how does this all build into the core argument for the project? Well, the investment case really rests on three main pillars. Pillar number one is that really remarkable land price. The easiest way to see it is to compare it to its brand new neighbor, One Holland Village. Now, their land was bought way back in 2018 for almost $1,900 per square foot. That's a huge difference compared to the $1,285 paid for SKYE at Holland. The second pillar, of course, is the location. Holland Village is just this unique mix of convenience and lifestyle. You've like the MRT right there, the new mall, but what's incredibly valuable are those protected, totally unblocked views over the good-class bungalow areas. That is a rare, rare thing to get in a city as dense as ours. And the third pillar is that all-star team. This is more than just a list of big developers. It's about the blend. You get the rock-solid reliability of giants like CapitaLand and UOL, and you mix that with the luxury expertise that a developer like Kang Leong brings to the table. For a buyer, that combo just means a whole lot less risk. Okay, so the case for it sounds pretty compelling, right? But any smart buyer always asks the same question. All right, what's the catch? So let's talk about the common hesitations. The first one, and this is probably the biggest question for any family buyer in Singapore, is always schools. That famous 1 kilometer radius is a massive deal, and SKYE Holland doesn't have any primary schools within that zone. But here's the counterargument. This project isn't really chasing those school-focused families. It's built for a totally different kind of buyer, one that's all about lifestyle, convenience, and tapping into that super strong rental demand from the expat community in Holland Village. The second hesitation is about price. I mean, it's a 40-story building. The premium for every single floor adds up, and it's pretty much a given that the higher floors are going to cross that big psychological barrier of $3,000 per square foot, and that can definitely make some buyers think twice. But this is where you have to look at the market. That price level isn't just a wild guess. It's already been set by a really strong precedent. A unit right next door at One Holland Village just recently sold on the subsale market for over $3,700 per square foot. A single sale like that helps to anchor the price expectations for the whole neighborhood. And finally, we have to talk about the classic Singapore property debate, leasehold versus freehold. You've got smaller freehold condos just around the corner, so why would anyone pick a big 99-year leasehold project instead? Well, the answer seems to be in the data. If you look back at the last 10 years in District 10, it's actually the bigger leasehold projects, the ones with over 500 units, that have seen stronger price growth. They're up almost 48%, while the smaller projects are up around 32%. It seems that the scale and the higher number of transactions in these big projects actually creates more price momentum. Now, beyond these standard concerns, there's a really fascinating pricing strategy going on in the high-end market today, and it might just be the real key to understanding the opportunity here. So, traditionally, you'd expect bigger apartments to have a lower price per square foot, right? That's just how it worked. But in some of the newest prime launches, developers are flipping that model on its head. They're pricing their biggest, most exclusive units with a higher per square foot price, and that changes everything for the smaller units. And we've seen this playbook before. A recent project called Upper House, also in District 10, did this exact thing. The setup is almost identical. It's a high-rise, it has very few large premium units, and the vast majority of the project is made up of two-bedroom apartments.
So what does this actually mean for you, the buyer? Well, if SKI at Holland uses the same strategy, then the entry-level two-bedroom units, which are estimated to start somewhere in that $1.6 to $1.8 million range, could be the most accessible way to get into the project.
And this creates what we call a sweet spot. It means that for a lot of buyers, the smartest move might be to go for these smaller units. You get into this amazing development, but you avoid paying those much steeper premiums that will likely be attached to the bigger apartments.
Okay, so let's tie this all together. We started this whole conversation with that strange land price, and that is exactly where we're going to end.
When you actually compare the potential starting price for a two-bedder at SKYE at Holland to what people were paying at One Holland Village just a few years ago, it makes you ask this really powerful question. It honestly feels like you're looking at prices from a past market. And that right there is the entire investment thesis in a nutshell. Is this project a rare market anomaly? Is it a genuine chance to buy into a prime core central region location, right next to an MRT, a new mall, but at a price point that feels like it belongs in the city fringe or maybe even a few years in the past? That's the big question every potential buyer needs to be asking.